What's going on? What's going on? What's going on? This is episode 6. Episode 6 of the Forex trading course for beginners. So, I really thank you guys that have been watching my video, subscribing. I really appreciate from the bottom of my heart. I have seen the subscribers number increase, so I'm really grateful. This is to show that you people like what I'm doing. And today, before we start, let us play the intro. So welcome back from the intro. So last time on the last video, if you have not watched the last video, we have talked about the last video. We have talked about account balance and calculating risk appetite calculation. I have showed you the easiest way to calculate your risk appetite without going through all those mass calculation and all those things. I have showed you. So in today's topic, we are going to be talking about, and the next point is technical or fundamental analysis. Whichever part you choose, the main purpose is to get your directional bias. So let us get into. So let us continue. Okay, let me erase all and technical or fundamental analysis. So technical analysis is basically trading off the chart using whatever indicator, patterns or setup you choose, or you may even just tweak it and trade without anything on the chart. Yes, technical analysis boils down to indicators. Using indicators, it can be moving average, Bollinger Band, or oscillators, momentum indicators, just anything, Fibonacci retracements, patterns. We have candlestick pattern, chart patterns like the doji, the engulfing pattern, just like, or you can use without anything clear price action, that is nothing on the chart. You can like treat. So all those things boil down to technical analysis. Then there are traders that we ignore the chart and trade off and around major news, which is basically the fundamental side of trading. So there are people also that don't even look at the chart to trade. They just trade around you. That is, they trade according to the economy of that currency. The economy of that currency. They just trade off profits. Is the total economy bullish because of the news, or what is happening around the economy, or is it bearish because of what is happening around the economy? And you will ask yourself, which is the right path to take? You will ask yourself that, okay, technical analysis or fundamental analysis, which is the best strategy, so because of what I went through in my journey have been so slow. My journey, I know that some people say that they spend 1 year. They just It just take them 1 year to be profitable. Some people say 6 months, some people say 2 years. So but mine have been a long journey, because I'm a curious kind of person that want to dig deep into things. I'm not like satisfied by just giving me your strategy, just showing me how to trade. I will do an extra way to dig into that your strategy. I'll be looking at faults around that your strategy, so that the pitfall, so that is those pitfall avoidable, or can I like avoid those pitfall. So that is that curiosity to know more have made my journey a kind of slow. I'm not saying that it is a bad thing to be curious, because it slowed down my journey, but it has increased my knowledge overall of how I see things, how I analyze my chart, what I see, the way I see things. I'm not saying that I'm perfect, but I'm saying that my knowledge now have made me see things differently. Although I still learn, I still look at people's video, pick one or two things, but but knowing things personally is very important. Knowing things, finding things for yourself is very, very, very important. So this, because of my journey, I have there are some people that are in this trading journey. The only thing they know is the mentorship that they eroded, what their mentor taught them. That is what they know. I have gone through many courses, and based on my curiosity, and I did not rely on only one course. I have went to read books. I cannot, as for now, I've not, I cannot count how many trading books I have read, but some of you have not read one trading book. You study off videos, learn through people, through mentors. Yes, it is good. Those things shorten your journey, because some of us that are self-taught, we went through struggles, trial and error. So learning from us shorten those journey, because a mentor will point out their pitfall and allow you to avoid it, whereby shorten your 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 journey. So enough of this ranting. So the point is saying that because of my knowledge, I am in the right position to tell you which part is good, which part is good. I believe that. So for you to get this my advice, which is the right part, you have to stick to this video. After I have treated about technical and fundamental analysis, then you will be able to see when I am explaining which part is the right part, and you will know why. So that to avoid argument, because you have gotten the knowledge of how technical analysis work and how fundamental analysis work, and you yourself, without me even saying it, you will quickly know which part is the right part, and when I say it, it will be a confirmation. So you have to stick until I finish everything about technical analysis and fundamental analysis. But in this video, in this episode 6, I'm going to be treating solely on fundamental analysis. So one more video to go about fundamental analysis, then then I will say which part is the right part. So you should, if you have not subscribed in this channel, so subscribe to this channel so that you will not miss this vital point. So let us continue. Fundamental analysis. It is having some long-term thoughts on a particular economy where you may decide to buy or sell the currency against another economy's currency. So what is saying that fundamental analysis is a long-term type of trade. It's not a trade that is very fundamental trader don't like okay, enter a trade today, just come into the chart today, you will see an opportunity, trading opportunity today, and enter a trade today and exit out today or over the next day. No, those are not fundamental. This is not how fundamental analysts trader trade. They can come into the market today, analyze their markets, analyze the economy through the news, and wait for a trading opportunity for like a week, 2 weeks, 3 weeks, even a month. They can wait up to even a month, even 2 months before they can get a trading opportunity. And once they enter, that trade can be they can hold that trade for a month, 2 months, 3 months. So fundamental trading is a long-term trade. It's a long-term thought, not like how we trade that trade. Go into the chart today, see opportunities that time, enter a trade today, exit out today. No. That is not how fundamental trader trade. It's a long-term trade. So, and that they are biased about a particular economy. They analyze a particular currency and the economy of that currency, and they can either sell it or buy it against another economy, just as another economy's currency. That's why we trade Forex in pairs. If you have not, go to the episode 1, episode 2 of this course. Those things I have explained, so I cannot re-explain it again. That's why we trade currency in pairs. I explained it either in episode 1 or episode 2. So go back and watch those videos. So there are some sort of news release every day that will affect some currency in some way. So this news is what they affect the nature of the currency. So you can hear news of war, news of famine, news of the economy, news of inflation. All those things affect the economy bias. So that is what we study. So the trick is to work out which way the news will affect the currency you are trading. So that is the trick. If you want to be a fundamental analyst, a fundamental trader, you should find out a trick on how to know how this news affects the currency you are trading. The problem with the news release is that if you are not aware of them, they can cash you out. There are some mistakes. They can cash you out, and because it moves the market 100 pips in a heartbeat, and if you are on the wrong side of it and without stop loss, it is over. So or it could have gone in your favor, but do you want to take that chance? So the problem with news trading, that fundamental trading, is in seconds the news can move the currency pair hundreds of pips, 100 pip, 200 pip, within a second. And what of if you were caught, you predict, your analysis was wrong? That means that and and to worsen it up, there are some people that does not trade with stop loss, and the, your account is will be totally blown, so it is over. And even if the disadvantage of this news trading is that it is in in the new news release time, that even if you place a stop loss, there's something we call um, 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 uh, there's something we call I forgot the name. So even if you place a stop loss, even if you okay, I have remembered slippage. There's something we call slippage. Even if you place a stop loss, normally if you are in the wrong side of the market, the stop loss, you should be taking out of the market exactly that position your stop loss is. But because of the news, the broker will not be able to take you out of your trade at that position of the stop loss. It can be like additional of some pips. So that is the disadvantage of trading the news, fundamental trading. So that is it. So that is the only disadvantage of trading 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 the news. The disadvantage comes more when you are not over aware of when the news will be released. So to know when the news will be released, I use Forex Factory calendar to check for news. So that is it. I use Forex Factory calendar to check the news. So let us, before we continue, let us go to the Forex Factory website, and we will be back to discuss. We will come back. So this is the website that I use to check the news, forexfactory.com. You see the news for the full week, Monday to Friday. You can see there's something you should know. You should filter the news. If you look at this up, you will see filter sign. If I click on filter, you can see that I selected only the pair that I trade, Euro, Pounds, USD, and you can choose the type of news you want. Is it high part use, the one that you see everything was ticked before, but I like the red one, which is the high impact. The red one are news that affect the that currency the most, and the medium impact news that they also affect it, but it is also medium. Then this yellow one, they don't impact, so I don't click it. I click at this gray one because it's talk about holiday, anything about holiday. So you should know when your bank is going to holiday. When anytime the bank is going to holiday, there will not be too much move in the market. So I click everything here at this place. I click everything business of all this speech, central bank, all the bonds, everything. So I apply. So you will see that everything here, you will see that it's only the red and the red and the, is it orange, the red and the orange that are showing here. So there's nothing Monday, there's news on Tuesday, Wednesday, Thursday. So Thursday, Friday contain more red. So Thursday will be, and you can see CPI on Thursday. You can see CPI and we just talk about CPI. So you see that CPI talk about inflation, which the central bank is concerned, is the main concern of the central bank. CPI. On Friday you see PPI. We talk about PPI. So you see that the move will be coming Thursday and Friday. There will still be news on Tuesday, and there will still be move on Wednesday. So that is how. So let us go back to the lesson. So welcome back. That is how I use my Forex factory. That is the website that I use to check my news. So let us continue. So how do I use this news? Let us continue how I use this news. In order for you to create this trick, for this way of knowing how each news will affect the currency, whether the market will go up or will go down, there is a certain trick that I use to create it. So for you to create this trick, you should ask these 5 questions. What is the central bank concerned about? What is the central bank concerned about? Each currency, their central bank have a website. You read their articles that they publish, and you will discover what they are concerned about. Okay. Number 2, what factor that affect their concerns? This concern, what are the factors that affect their concern? What are those things that affect their concern, whether it will be bad or it will be good? And what is the bias of those factors that affect their concerns? What is the bias? I will explain everything. 4, what factor do the central bank have under their control manipulation in order to solve their concern? 5, as an investor, does this benefit me or not? So as a trader, we see ourselves as an investor. So all these 4 questions, you ask yourself, is this to my benefit or to my disadvantage? Okay, let us continue to give you more insights. An example, we will use an example of the US economy. The number 1 question, remember, is what is the central bank concerned about? If you go to the Fed, the Fed is the central bank, is the central bank of the US. So when you really read the article of the central banks from last year down to this place, their main concern is inflation. And how do we see, which news do we see the inflation, the amount of inflation, whether the inflation is going up or going down? In the consumer part, because when you're looking at it, you look things at the 2 sides, in the consumer part or in the manufacturing sector, in the consuming sector and in the manufacturing sectors. So on the consumer sector, we look at CPI and PCE. These 2 news shows the amount of inflation. On the manufacturing part, we look at PPI and PMI. Is this 4 news increasing or decreasing? You understand me? So number two question. Let us go to the question. Number 2 question. What factor that affect their concern? So this inflation, what factor affect inflation? Consumer spending. Consumer spending is what affects inflation. So how do you gauge consumer spending? We gauge consumer spending in wages. Wages. So this news wey wages come the same time when NFP comes at the same time. That is average wages paid, something like that. So you will see, you will ask, is wages increasing or decreasing? Because you know what, we as a consumer, the more salary we get, the more we spend. So that is it. And the more spending, it increases price, which increases inflation. Remember, the more the demand for a goods, the higher the price. The higher the price of a thing, because the higher things become. Okay, excuse me. Let me start. The higher the wages a consumer gets, the more he buy things, and the more he buy things, the increase in demand, and the more increase in demand, the higher the price of a goods. So which affect inflation. Employment rates. Employment affect consumer, because if a consumer have a job, he will say, let me spend this, I have a job, I can get another money. But if a consumer is unemployed, he reduces his spending. Just as wages, if the salary of a consumer is reduced, the consumer reduces his spending. Then non-farm payroll. Non-farm payroll is like the number of people that have job that are paid, something like that. So these are things that we gauge. So consumer spending. So the factor that affect inflation is spending. So when spending reduces, inflation reduces. So third question, what is the trend of those factors? This consumer spending, what is the trend? That is the news on wages, the number coming out on wages, on employment rate and non-farm payroll. What is the trend? There are three trends. Bullish, that is upward movement, that's increase in the number. Then bearish, then which means decrease in the number. The consolidation, which is up and down, go up one time, come back, come down the next month, go up the next month, come down the next month, go up the next week, come down the next week. So at this moment, when I gauge everything on these three newses, they are consolidating. That is, this month they will be up, next month they will be down, this month they will be up, next month they will be down. That is consolidating. So number 4 question, what factor do the central bank have under their control or manipulation in order to solve their concern? What is the power that the central bank have to control inflation? The answer is interest rate. If you look at the US economy, last year when we faced with the close to recession, that this lockdown, COVID, something like that, central bank started increasing their interest rates. I was sorry about the noise. So central bank started increasing their rates, but now coming into this year, central bank have been like, they don't want to. They have remained stagnant. That is, they are not reducing interest rate. They are not cutting down interest rate. I know, because at this position where the consumer spending is like in consolidation, going up, going down, going up, going down, the central bank is somehow careful, because any changes Any change in the interest rate will cause a very significant change, because now the economy is not like they are, it's not going up or it's not going down. It's like in consolidation. It's going up today, going down tomorrow, going. So that's why they leave the interest rates where they are now. So the five question: as an investor, does this benefit me or not? So as an investor, what is my permanent per as a investor, my concern is getting a profit in my investments. So investor profit from interest rates. That's why investment is they look into interest rates and the factor that affect interest rates. That is, they look at interest rates. That's why an investor analyze chart like this must ask themselves these five questions: what is the central bank concern, and then what is the central bank doing, and what is the factor affecting the central bank. So investors, they look at interest rates and the factors that will affect interest rates, which is consumer spending. So if the central bank increase interest rates, it is good for the investor because you get more return for your investment. If the central bank cut down interest rates, it is not good for an investment. So for an investor, so an investor will put more money in a currency which move the currency to become bullish when there is more probability for this central bank, the Fed, to increase interest rates. But now consumer spending is like fluctuating. So though at this state these investors are bullish, that is, they are putting money, their money is inside, they are still investing, but they are still cutting down they are cutting down their investment, their risk. They are reducing their risk while still investing. So now, as an investor, my answer is I will be putting money, I will be investing, because the interest rate is still high. The Fed has not cut down interest rates. The interest rate is still high. The Fed has not cut down interest rate, but at the same time, the Fed is considering a cut on interest rates. But they are still like, okay, let us wait. The trend of the consumer spending is not like, it's not having one trend, but going up and going down. Let us wait, let us see, let those, the wages, the employment rate, the non-farm payroll have a particular trend, at least the same trend in 3 months in a row, like something like that. So that is it. So that is everything about. This is where our lesson end on fundamental analysis. So I know that I have talked too much. You can, if you do not understand anything, rewatch the video, and if you still don't understand anything, you can put your question on the comment. So that is it about fundamental analysis. That is everything you need to know about fundamental analysis. These 5 questions is how you create your strategy on fundamental analysis trading. So if you say your part is fundamental analysis, okay, it's okay, you have gotten everything that you need about fundamental analysis. This is everything something about fundamental analysis. So on the next video, I'm going to be talking about technical analysis. And I want to drop a secret that nobody that only you have to hear. On the next video about fundamental analysis, I'm going to be telling you the key points, the one thing that you must consider when picking a technical analysis, that is a strategy on technical analysis. What I mean is bringing all technical analysis strategy. There is something that all technical analysis have in common, and that is what you should be looking at when choosing a strategy. So you see now, I'm not over telling you what kind of technical analysis style you should take. I will tell you what you should look before choosing a technical analysis, a technical way of trading. Too much English. So that is it for it. So if you know that I have given you this video I've given you value, support the channel, like and subscribe. I'm not even the main thing is subscribe to this channel so that we can grow, and also share this video. So peace, I am out. See you in the next video.